Hi, it's Stephen here from Share Navigator. It's November the 18th, and this is your options and futures trade update. Today, we're going to focus in on the S&P 500 SPY and our option trades there, why I think there's some great opportunities coming. And then we're going to have to mention Bitcoin in the same breath, and we'll explain why later. So let's get started. Okay, so let's start off with SPY, and we need to look at the chart at SPY now. It was down in nearly 1% yesterday. And this is a great opportunity in my eyes. And I'm going to show you why, just from a technical perspective going forward, and also the rationale for what I'm about to say about our existing option trades. And we're going to have to mention Bitcoin in this conversation as well. So let me start with Bitcoin then, just to explain something to you. So look at the share price of Bitcoin, or you can see how much it's fallen in the last period of time. So we've gone right down there today. We were down 28% from peak to trough. Why is that important to you investing in the S&P 500? Well, we all know that, lots of people and lots of institutions now have big exposure to Bitcoin and other types of digital currencies. And the reason this is important, a lot of them use leverage to get there. And if, for example, their portfolios are under pressure from Bitcoin, they may be getting margin calls now, which means that they have to force sell other assets in order to maintain their Bitcoin position if they want to. So, for example, if you had a portfolio that was leveraged highly to Bitcoin and you also had a lot of stock in it, you might be forced to sell your stocks in order to keep your Bitcoin position if you want to. So there's a knock-on impact into the stock market of other asset prices falling sharply, like Bitcoin has. And today it took out a new low, like that. It's after recovering somewhat. But after that, if we don't hold this support area here, like, you could be talking there a total sell-off of 40% of Bitcoin. And it's not out of the question. And the knock-on impact in that into the stock market is, as I said, so you've got to think about Bitcoin in this conversation. I'm not talking about trading Bitcoin, as you know, I don't do it. But you need to look at it in conjunction with the S&P 500. So moving back now to the S&P 500, the 1% fall looks quite small now. And if you look at the chart on an overall basis, it's still in an uptrend. It's just giving away some of the gains. It's very, very healthy, by the way. And this is what I'm saying. I'm excited about the opportunities that it's presenting. And again, I just want to show you the volatility index here. That's starting to spike. So when this happens, again, from a technical analysis point of view, usually when the volatility index spikes, actually, it's a great time to buy in the market. And we're not quite there yet in terms of, it's not enough of a spike to say, oh, you got to start buying in. But we're not too far away from it either. And that was kind of your April event. This was tariff land. This is the most recent little wobble here. And the markets just rallied straight after that. If you looked at all of these spikes in the VIX, it was followed by a rally in the S&P 500. Okay, so we're not too far away from it. I'm not saying we're there yet, but it's the reason why I'm getting excited. And I wanted to tee up what I'm about to explain, how I'm going to manage our existing option trades on SPY. And also to tee up for people who haven't put an option trade on yet, why now is a great time to do it, because the premiums are just so much better. You're getting paid more money now to put these option trades on. Okay, so my own opinion is, if SPY doesn't, the next target on SPY, which is the ETF we're trading on options, is here. If SPY takes out this low here, then we're probably going to move to this low here, which is at about 650. Okay. And then if that doesn't hold, we go down, and so on and so forth. To me, this could fall all the way to that 200-day moving average, and we'll still be in an uptrend. So I want you to bear all of that in mind and all those technical levels in mind. And always remember, you can't time a bottom. But I want to show you, just on a chart sense, what trades we have on at the moment. And this is why I love option trading, because it gives you so many outs. And again, the first trade we have on is, we sold a $620 put option down here. What that means is, we've insured the value of somebody else's S&P 500 shares to the value of $620. And we got paid a premium for doing that. The reason somebody would buy that from us is because they get peace of mind. They might go, okay, we're if the backside falls out of the market, I'm protected. That's why they give us the money up front. We get that up front. So between now and December the 19th, we profit in three ways. SPY goes up, goes sideways, and falls, as long as it doesn't fall below our break-even price, which is actually around 615 on this particular trade. So That's why statistically we've got like over a 90% chance of making money in that trade. And the great news is, if you haven't put this on yet, the premiums you're getting now are so good because the volatility has gone up. So insurance premiums go up when volatility goes up. And as we can see, volatility has gone up. So it's a great strategy to apply. So we've nothing to do with this trade, even though if I go into our positions here, our profits have come in a bit. We were up $300 in that at one stage. We're now only up 73. But again, it's just brilliant to show you a trade that we put on and the market has fallen since, and we're still up on it. And that's because it's a time-wasting asset that we sold. The insurance policy is time-wasting. Every day we get closer to expiry, we make money from time decay. And that's why I love the options trading, and why, in my opinion, it's a safer way to trade when you know what you're doing. Okay, so we're not going to do anything with that trade. The other trade we put on was what we call a combination trade. Now, this is the one I want to talk to you about, because this is the one we've gone into a slight loss on it. I'm not concerned about that $50. Basically, it was a combination trade. Going back to the chart to try and explain this, we basically bought insurance in this one at the beginning, and then we also sold insurance at the same time underneath it. So what we want to happen with this trade is SPY actually to fall to 550. And if it could stop there on December the 19th, we would make our optimum amount of money. Now, that's highly unlikely. It's not going to happen. But what we did is we bought a put option at the 650 strike, but we sold, or the 660 strike, and sold twice as many at the 650 strike. And that generated us a credit. We actually got paid to put this on. So we actually want the share price of SPY to fall to get our maximum profit, but not fall below 650. Now, our break even on this one is 635. Okay, in and around that level. We took in $580 contract. Now, here's what I'm saying. The way I'm going to manage this personally myself. If SPY keeps falling, and even goes down here, I'm actually not going to manage this ratio put spread for myself personally. I'm actually going to take the assignment of the shares. I'll manage the 620 put, but I won't manage the 640. And the reason is, it's my belief that this will be a short-term correction. I would want the assignment, and then I believe I will profit all the way back up when SPY touches 700 again. So what will happen here is I will profit from 660 down as far as 635. I'll make some sort of a profit. But if I get assigned the shares, I might be holding on to them in the short term for a loss. But the way I look at it is, I've just bought the S&P 500 at a discount. And then finally, just to kind of copper fasten the whole S&P 500 theory here, go back over time. If this event happens where the S&P 500 drops to the 200-day moving average, this RSI pretty much is going to be below 30. I've done a statistical analysis on this over the last 50 years of when this has happened with the S&P 500. And when the index crosses back above 30 on the RSI, you've circa a 90% chance of making a profit over the next number of months. So for example, if I do get assigned, like it is above here, there's a good chance my RSI is going to be below here anyway. And my view is we're going to benefit all the way back up to the upside. Now, the only caveat to that, and the only risk warning I'll put on this, is that if the backside continues to follow a Bitcoin, there might be a knock-on impact. And then if we get some sort of economic data out of the US that suggests that the US economy is faltering, maybe that changes the goalposts. But right now, we don't see that. And therefore, we feel that this temporary pullback is creating a buying opportunity. But I don't want to buy up here. I want to buy where my break even is down at about 635, and I will take assignment. For those of you who don't want to take assignment on that trade, that's fine. All you got to do is roll out and down, and we'll discuss that closer to the time if that happens. Okay, this is your option trade update. Thanks and bye for now.